Welcome back. You're watching the market, and we still have with us Kunal, and joining us now is Mahuresh Joshi as well. Mahuresh, hi, morning. To start off with, we were having a good discussion on with Abhay Soy of Max on the kind of capping that government parliamentary committee is proposing. What's your view on that?
Morning, Sajid. I think it's a mixed set, right? I was hearing Abhay out, and obviously, I think the hospital management teams are right in their own stance. What the government and the regulators are probably proposing is also equal in their own estimates. I think what we probably heard on the street and the practical experiences as well, and all of us would have heard this and experienced this at some point in time in terms of how the billing probably happens. The delays taken in discharge, the cost that probably comes in, the initial question that gets asked when you're probably getting admitted, do you have insurance or not? So there are multiple of these issues at hand that probably exist as we speak. And therefore, I think to make hospital care more affordable, specifically in tier 2, tier 3 cities, this is still a huge varied issue as we speak. The number of hospital beds, the number of doctors that are probably catering to the kind of population that we probably have is absolutely visible as we speak. And therefore, I think there is need for more entrenchment probably to happen and healthcare to become more affordable. So I think the arguments on both sides are probably valid. Let's see how this goes.
Hmm. Mayuresh, just hold on for a moment. I will, get some more updates from this on for Godrej is trying to get to achieve that target of 5 lakh crores for the group market cap. Mayuresh, what's your view on this exit and the change in board management coming in at Godrej Consumer? Do you think that we saw 22% jump on Godrej share price when Sudhir came in, but the stock hasn't given any returns to the investors?
Absolutely. I was about to mention that, it's like 20% on its day of announcement. But the stock has really done nothing, as May was pointing out. Yes, there have been improvements in terms of how the volumes have probably played out, more product innovations that have probably not been produced to a large extent. But ultimately, I think the proof of the pudding is how an ROI is generated from an investor perspective, which is absolutely nil as we speak over the last more than 5 years. Having said that, I think the expectations for a decent amount of growth is still expected to continue. For the sector as a whole, I think inflation on input costs are still going to be a little bit elevated as we head into the second half, as most managements have probably put in. And if there is an El Nino effect that probably comes through, what probably happens with the demand dynamics is something to watch out for. So we are very, very selective in this space. Our own sense is that numbers have been exceptionally good for the sector as a whole in the quarter gone by. I think the next couple of quarters, assuming all these macro developments happening on geopolitics, input costs, inflationary pressures, and demand dynamics is something to be watched out.
Quite substantially from those $5,500 an ounce levels to around $4,000 an ounce, even though our own duties on gold seems to cushion some part of that fall. How should one look at lenders now, given the fact that we started to see a bit of a rally on gold? Can that price sustain? How are you placing your bets and how do you play that?
I'm pretty sure that it's similar to crude. I think the volatility continues. And therefore, if the volatility remains on table, the prices might move accordingly at any given point of time or any given point in a week. Having said that, I think both these players are trying to diversify out of the gold business, get into the housing finance business, trying to improve the AUM out there as well. And therefore, I think the expectations that is largely getting built out is how the loan growth itself as part of their core business is expected to grow. Again, I think the customers that they're probably catering to are pretty unique in the own sense that they operate out of. And both the management sound pretty sanguine and optimistic in terms of growth remaining pretty solid as the space is concerned. The other spaces that they're pouring into as well, I think there are some elements of hiccups in terms of asset quality and some slippages that we probably see in terms of elevation in credit costs. However, having said that, I think the expectation in terms of core business, if that continues going well, I think there is still an argument to be made with these companies can do well. I think a couple of risk factors are just to point out. One, I think as you rightly pointed out, I think the volatility in gold prices obviously have a huge say in terms of the earnings sensitivity for all these stocks that are concerned. And second, I think the recent circular that RBI has come through for NBFCs in terms of revolving credit. I think does that play a part here as well? Because I think if you probably are seeing gold prices correct, they're sufficiently moving with LTVs at their best and favor. The top-up loans for existing customers become a little bit difficult if these norms are clouded. So I think you have to keep these 2 points in perspective.
Before I let you go, Mayuresh, I want to first bring in Rajesh Palvia as well of Axis Securities. Rajesh, I'll come to you in just a minute or two. Bear with me. I need to let Mayuresh go. Mayuresh, very quickly, some ideas. There's just so much happening in markets, at least in terms of activity, in terms of corporate announcements, earnings, con calls. Anything that's standing out for you? Anything where you've changed your view? Any fresh ideas?
Also, our own sense is that mid-private sector banks and NBFCs have done a stellar showing first in the quarter gone by. So one of our favorites, Godrej Bank, has become still an actionable at this point of time. I think solid set of numbers, and there is no complaint on any count. Advances growth, advance deposit ratios. You're probably talking about NIMs being very, very stable and expanding marginally though on a quarter-on-quarter basis. You're probably looking at asset quality pressures remaining absolutely range bound. The slippage is very much in control. The overall restructured book in control as well. And then return ratios remaining extremely strong. So mid-private sector banks as a space, it's extremely strong and viable in that sense. The Mayuresh Bank probably remains a very, very strong pick there. In NBFCs, I think our own sense is that irrespective of how the environment was, I think the numbers were exceptionally strong. Ujjivan Small Finance Bank is something where our belief is the kind of numbers that they broadly posted, the UM growth was relatively strong. Asset quality pressures, GNPs at 2%, were very much under control. Again, the entire gold loan component that you're speaking about, they've got a reasonable chunk out there, that they're reasonably diversified as far as their entire lending is concerned. The entire stage 2, stage 3 book is absolutely under control as we speak. The NIMs have actually expanded on a year basis to 8.5%. The return ratios, like in the case of Mayuresh Bank, are extremely strong as we speak. So yeah, I think the new actionables that we probably have done at our end are our spaces within this mid-private sector banks and very, very selective lending basis.
Okay, all right. Mayuresh, thank you so much. We'll let you go on that note. Thanks so much for coming in and giving us those views. Let's